Something doesn't add up on SUI right now. Taker flow is aggressively buying, but Coinbase, the US desk, is trading at a discount to Binance. Funding says longs are crowded and paying. And there's a liquidation pool worth over $1 million sitting quietly below spot that nobody's talking about. Meanwhile, yesterday's short call is still open, still live, still unresolved. Is this a squeeze setup, a trap, or both? Stick around. The exact entry, the stop, and the level that kills the whole idea are waiting at the end. Hey, it's Finance with FM. Today is August 11th. In the next few minutes, you'll get the exact level that flips SUI's bias, the hidden trap sitting just under spot, and the full trade plan, entry, stop, and target. Since yesterday's call, the wall at 70 cents, SUI slipped about 0.6% from around 69.45 cents down to about 69 cents. The prior short triggered at 70.03 cents with a stop at 71.04 and a target near 66.84 is still live. It hasn't hit stop, hasn't hit target. It's just sitting there unresolved while price grinds sideways underneath the trigger zone. SUI is trading around 69 cents right now, down a little over 0.5% on the day. Price is stuck between a rising layer of support near 66 cents and a thick wall of resistance up near 72 cents. Momentum is neutral to slightly improving, but funding and the liquidation map both point to a leverage flush hiding below spot. Net, this reads as a fade the rip market until proven otherwise. Zoom into the 15-minute chart, and you can see today's whole story. SUI carved out a lower high around 70 cents, then rolled over into a clean falling channel. It tagged support twice near 68.5 cents before buyers stepped back in. Right now, price is climbing back toward that declining trend line, sitting close to 69 cents. The reaction at that trend line in the next hour or two tells you whether this is a real reclaim or just another lower high forming. In plain terms, price is bouncing inside a falling channel and testing its ceiling again. On the 4-hour chart, SUI has been boxed inside the same range for almost 2 weeks now. A floor near 66 cents, a ceiling near 70 cents. The most recent push came on August 9th when price spiked towards 70 cents and got sold straight back down. Since then, it's been grinding lower, and it's currently sitting right on the 69 cent pivot. Until one of those two boundaries actually breaks, this stays a range to fade, not a trend to chase. In plain terms, SUI has been chopping sideways in the same box for 2 weeks. Stepping back to the daily chart, SUI has been inside a gently descending channel since the middle of July with lower highs stacking one after another. The floor of that structure sits down near 65 cents, and it's held every time price has come down in to test it. Right now, SUI is parked almost exactly on the 69 cent pivot line, right in the middle of that channel. A clean break of either edge is what actually changes the character of this move. In plain terms, SUI is stuck in a slow, gentle downtrend for weeks now. The daily RSI is sitting at 45 right now, which is about as neutral as this indicator gets. It's not flashing oversold near 30, and it's nowhere close to overbought near 70 either. There's also no clean divergence between price and momentum at the moment. The indicator is basically just following price sideways. That neutrality is actually the tell here. Momentum isn't giving buyers or sellers a strong edge, so the range-bound structure on price makes complete sense. In plain terms, momentum is flat. Neither buyers nor sellers are in control. MACD just gave a small bullish signal. The MACD line has crossed above its signal line, and the histogram has ticked into positive territory. That's a short-term momentum improvement, but here's the catch. Both lines are still sitting below the zero line, which means the broader momentum regime is still negative. Think of this as a tap on the brakes during a downtrend, not a hard reversal. It needs a push above zero to mean anything more. In plain terms, momentum is nudging up slightly, but the bigger trend is still down. The map is fairly clean today. Overhead, the biggest resistance sits at 72 cents, where a large ask wall is stacked. Below that, the entry trigger for today's setup sits at 69.6 cents. On the downside, a dense liquidation pool sits near 67.5 cents with the big bid wall support down at 66 cents and daily structural support underneath that near 65 cents. The stop for today's plan sits at 71 cents with the target down near 66 cents. Funding is barely positive, running about 10% annualized, which means longs are paying. A mildly crowded long position that can fuel a squeeze lower if it unwinds. Open interest is up 3.4% over the past week to about 112 million SUI. So leverage is building into this range. Global accounts are long skewed at 2.03 to 1, and top traders are even more long at 2.39 to 1, both aligned. So there's no fade the crowd edge there. Taker flow is aggressively buying at 1.72, yet Coinbase is trading at a slight discount to Binance, meaning US spot demand is actually softer than the taker tape suggests. The order book is 59% bids, with the big wall at 66 cents and the ask wall at 72 cents. Retail accounts are net long 2.03, while top traders are net long 2.39. They're aligned, so positioning gives no edge fade right now. Funding is longs paying, crowded longs squeeze down fuel, plus 10% APR. Coinbase is trading minus 0.087% versus Binance, US side selling, Coinbase discount, American supply pressure. A persistent positive premium is the fingerprint of US spot ETF buying. A discount means American holders are the sellers. With market 1, dense long liquidation clusters sit near 1, 25x and 1 50x below. Short liquidation clusters near 1 and 1 above. Funding leans the pressure, downside, longs crowded paying, long liquidations below are the magnet. Price hunts the heavier pool of stops, so treat the nearest cluster on that side as a target, not support resistance. The heaviest flush zones above spot are 0.6925, $652,000, 0.6934, $191,000, and below spot 0.6749, $1.2 million, 0.686, $856,000, 0.6712, $808,000. The densest single zone is 0.6749. These are the prices where leverage has actually been cleared out recently. So they mark levels the market already fought over rather than levels it is aiming at. CoinMarketCap's own analysis today flags SUI as consolidating after finding support near 66 to 67 cents, with the next real test up near the low 70s. That lines up almost exactly with today's order book wall. Separately, Grayscale quietly dropped its Cardano, Polkadot, and Hedera ETF plans, which possibly signals fading institutional appetite for altcoin ETF products more broadly. Not great optics for SUI's own listing hopes. Combine that with Bitcoin dominance sitting near multi-month highs, and the macro backdrop likely keeps capital rotation into alts limited for now. Today's computed setup is a short. Entry triggers at 69.6 cents. Stop sits at 71.01 cents. A 4-hour close above that level fully invalidates the thesis. Target sits down at 66.07 cents. That's a risk reward of 1 to 2.5 clean and gated before you ever risk a cent. One serious word before you touch this level. This is education and market commentary, not financial advice, and nobody here knows your situation. Any setup can fail. The invalidation level is there because it will get hit some days. Never trade money you cannot afford to lose. Always set your stop loss, size small, and do your own research. So, was it a squeeze setup or a trap? Answer: both loops close at the same spot. The 70-cent wall decides everything, and until it breaks, the trap is the long side, not the short side. A quotable line for you: SUI isn't choosing a direction. The 70-cent wall is choosing it for them. One word in the comments, long or short from here. Hit like, drop that comment, subscribe if you're serious about trading this range. And the video on your screen right now continues straight into the full Elliott wave on-chain and cycle breakdown in this week's flagship deep dive, link below.